Thank you for checking out Quantify. Today we're taking an in-depth look at the KSE100 index, starting with the higher time frame to get a sense of the broader market structure, and then moving into lower time frames to see what we can expect walking forward. So on the 3-month time frame, you can see that the trend is clearly bullish, but we can break this chart down into a few different moves. So starting here, we can see that we were in a secular bull move from '01 to '08. So 8 years of upwards move. We then got into our financial crisis, which led to this waterfall down through the 20 EMA, but on decreasing volume, which essentially went down to just, actually it's not decreasing volume, it just looks odd. But anyway, we went through the 20 EMA, and then we got our first attempt back up, which was across 9 months. We moved up over the 20 EMA, and then it was sideways consolidation for almost an entire year on decreasing volume. We then get another push up, but it just leads into a higher high and then sideways consolidation for another year. So this is our first move. This is our second move. And then we finally get another push up through the previous all-time high. And that is where our secular bull move began. So let's mark it down. Previous all-time high, 15,739, which got down all the way to 4781. And then here we pushed through this all-time high, backtest this resistance. So previous resistance now acting as support, and then volume starts showing up. And we basically don't look back all the way till April of 2017. So that is almost 5 years of our secular bull move. We get all the way up to 53,100, and then we get a bear break, and another bear break, and then another bear break, and then finally we start moving back up on notable volume. Let's look at the monthly time frame for a bit more detail and clear this chart out. So on the monthly, if we just look at the right side of the chart, we have our all-time high of 53,127 into a bear break through the previous higher low. We did find some support at the 20 EMA, which is basically evident from these long lower wicks. But we get a bear flag, and then we go down through the 20 EMA. We try to get back up, but it's just selling pressure all the way through here. This is a second attempt at getting over the 20 EMA, which we do. We close over it, but there is no fall through, and we just fall back under the 20 EMA here, grinding across, and then this is where we get our first real bear break. So if you look here, you'll see all these lower, long lower wicks, which is basically bears trying to push the price down, but bulls still buying the dip. And then this is where the balance essentially shifts, and we reject from the 20 EMA into a bear break, which is essentially a cascade of 1, 2, 3, 4, 5, 6, 7 months of straight selling into, so down from 53,127 to 28,700. We then find some support at this higher low back from April of 2015, and this is when the balance shifts again. We get a bull move across 1, 2, 3, 4, 5 months, and push right through the 20 EMA on consistently notable volume. This was also a oversold bounce, so the bulls essentially carried this through all the way up to 43,400, or let's call it 43,500. At that point, we are looking for a higher low versus this, but then we get the COVID dump, which was a very quick flush all the way down to 28,700, and actually down through it to almost 27,000. So let's mark that and get rid of this one. So we get the COVID dump, but bounce right off the 27,000 mark, which is also a support from here. and pretty close to the 200 period moving average, which would be the 200 month moving average here. Uh, we then get a bounce all the way up through the 50 EMA, or actually the 100 EMA, into a bull flag, which then gets followed through with notable volume. We go up all the way to the previous high, then consolidate sideways for a bit into a bull flag. And you'll notice that this consolidation began on high volume, but then it declined through the next few months. We then bounced right off the 20 EMA. So this is clearly a very good guide. As long as we are over it, good things happen. So from the COVID dump, we get all the way back up here and then bounce off the 20 EMA into a bull flag on increasing bull volume into another higher high. So at this point, we have changed the monthly trend. So this was our low, let's call it the low of the COVID dump, lower high or a double top against this high into a higher low and a higher high and a higher low. So we basically tested the 20 EMA twice on the monthly. So right now we are looking like a bull flag on the monthly, but this is also a key resistance level because, so this is 47,300 or 47,400. So this is a key resistance level because we have rejected from it multiple times. So once, twice, three times, four times, and now if we don't break it on Monday or Tuesday, we are effectively under it for another month because this monthly candle closes on Tuesday. So essentially what the bulls need for continuation here is increasing volume and basically price pushing through this high. That's on the monthly. Another thing that kind of stands out very clearly if you zoom out all the way here is that we are bouncing off a very long trend line. So on the monthly, if you draw a trend line here, you can, or actually maybe not that one. Let's zoom in. So from here across here, yeah, that makes more sense. So we are bouncing off of this line and we essentially have confirmed it as a strong trend line, considering that we have one touch here which led to a bounce and another touch here which essentially led into our secular bull move. And then we have found this down as support almost twice here because this came down pretty close to it, but even if you don't count that, we still have 1, 2, and 3 touches here, solid touches here. And price is now bouncing off of that. And we also have our 20 EMA underneath the price action right now. So if we go into maybe the weekly, we can see a bit more detail. So this is our all-time high, and then our dump, our COVID dump, and then our current bounce. So on the weekly, the thing that stands out is that every bull push up came on increasing bull volume, and then all the consolidations came on decreasing volume, which is essentially what you want as a bull because that tells you that people are just not as interested in consolidation and they're essentially buying the dips here, which is also evident from the fact that we have long lower wicks here. And then this week was pretty interesting because if you look at the KSE all, which shows you the entire market, we had 2 consistent days of all-time high volume. So on the 26th, we hit 1.56 billion shares traded, which was about 39% higher than the previous all-time high volume. And then the very next day, we hit 2.2 billion. So this does look like a volume climax, unless on the daily it has a volume climax, on the monthly, it also looks like a volume climax. Or maybe not, we had it around here. But looking at the weekly, it's essentially a bit more detail on the same move we just saw on the monthly, except that we have a ton of volume here, which is about just under 3 times the 20-period average volume here. So here if we start from the COVID dump, let's start marking this. So we dumped all the way down to, let's call it 20,000 points. And then since then we've moved up, and this is our current resistance. And our 20 EMA is a support right now. The other thing to note is that the 20 EMA has also crossed the 100 and 200 EMA from underneath, which is a bull cross. And then if you zoom in here, the 100 period EMA has also crossed the 200 EMA from underneath. So those are both bullish signs. The fact that the 20 EMA is providing support is also bullish, and just the overall structure of this chart is very bullish because if you measure the distance, let's go out to the monthly. So we are right now at 31,800, which is about 14% from all-time highs and 37%. Oh, actually, yeah, 37% from the dump. But anyway, going back to our KSE100. So same thing here. It's pretty much the same look. On the weekly, we have the same attributes on the EMAs and the volume, and RSI is around 64, which is just above the median, so that's not a red flag at the moment. Looking at the daily, again, if you zoom out, you just see a bit more of that detail here. But if we just focus on the right side of this chart, so we have been bouncing around the 20 EMA, and this kind of looks like a tightening equilibrium which has broken bullish. So if you start drawing from here, we got a dump in March of 2021 when we went from 46,400 down to 42,700, and then price action essentially just tightened up within this range. So if you just start again, 1, 2, 3, 4, 5, 6, 7, and then this is where we get our bull break. So we basically move back up over the 20 EMA, get a bull flag, get a continuation move, and then right now the daily also looks like another bull flag. I don't necessarily like this long upper wick on higher volume. But again, this was from the prior week when we had the two highest volume days. So this is a bit skewed, but anyway, this schematically looks like a bull flag. So that's that. And then RSI it is just under 70, so it is not overbought yet. So that's not a red flag. So at this point, what do we expect going forward? So from a pattern perspective and a trend perspective, we are bullish because we have higher highs and higher lows, which is a bullish trend up. And then we have a bull flag here, which hasn't played out yet. It just looks like a bull flag. We have not confirmed it. So what can we expect going forward or walking forward from here? So we know that we have a key resistance up at 47300, or let's call it 47400. And then our next resistance is our all-time high. which is 53127. And then on the monthly time frame, we have our key support at 42700, which is the monthly higher low, and it also somewhat coincides with the 20 EMA on the monthly. But going back to the daily, this is our key resistance on all time frames, whether it's monthly, weekly, 2-day, or the daily. This 47400, 47300 is our key resistance at this point. And then our key support is 42700, which is our monthly higher low. But on the daily, we have intermediate supports or daily supports, which are, this is not a higher low, so maybe this one, 45500, and then 43630. And then you can also mark this one, 43471, as a daily support. On the weekly, it's the same support. So we have a bit of a support zone here. We also have the 20 EMA and the 100 EMA as support. The 20 EMA is a shorter EMA, so it's more of a guide, and then the 100 EMA is considered to be more of a pullback support. So walking forward, there are basically three scenarios that we can consider. One is just that we continue to march upwards and we break through this resistance and make our first attempt at all-time highs. So that would effectively look like, that's what the direction is. What it actually ends up being is something that nobody is here to predict. So that's scenario A. Scenario B is that we reject from this resistance and then we continue to tighten up it sideways. So let's call it scenario B. And then the third one is that we reject and we go into a lower low versus the daily higher low. And at that point, we can either just consolidate here or we can go here. But let's just say this is scenario C. Now, considering the fact that our underlying market structure, which is basically the 3-month, 1 month, and even the weekly, all of those time frames are looking bullish and looking upwards. We should be aligning ourselves with that trend and trying to play that, as opposed to trying to fight the trend. So in this case, scenario A is essentially where you want to be, where you want the market to be, and that's what you want to play. We can get into a bit more detail there. But scenario B is essentially sideways consolidation, where we would effectively expect that the market goes sideways and then tightens up and either breaks full or breaks fair. But as long as we're in this sideways range, there's really no point trading this because it's just a 2000 or not even, it's just a 1700 point range. So this is, if the market goes in this direction, you can just look elsewhere for trades and wait for this to break. Scenario C is a bear break scenario on the daily. Again, I would personally not trade this if the market breaks fair because I know that the underlying trend is looking bullish. So I would rather not fight the trend. But if you were to play this, you could effectively wait for price to break bear through this higher low and wait for a back test and enter there. And then your first target would effectively be this level here. And then your second target would be this level here. But coming back to scenario A, so let's just mark this back up. This is our resistance, this is our key support, and this is our intermediate support here and here. So in scenario A, we are effectively looking for the market to break this resistance and then march up towards all-time high. What happens then is a completely different story, so we'll get to that when we get to that. But for now, in scenario A, what we can kind of expect is if we do break bull from this resistance, there are two ways to play this. One is to wait for a backtest of this resistance and then enter on continuation. And the other way is to just enter straight on the break. Whenever the price breaks, you enter and then you set a stop loss on your target. You set a stop loss on your target in either case, but if you're entering just on the break itself and nothing else, then you should probably put a very tight stop, maybe just under this 47300 resistance, because if we break bull and then we come back under it, that's basically a failed break. So that is something we want to avoid. So the better option is to, hang on, let me get rid of this. So the better option is to wait for a back test, but that doesn't mean that you wait for a backtest on the daily time frame and then wait for a daily continuation. You can effectively go into a lower time frame like the 2 hour or the 1 hour and use that as your trading time frame. So you can use the daily as your setup time frame and then use a lower time frame like the 2 hour or the 1 hour to use that as your trading time frame. So if you were to enter on a break of this and you want to wait for a backtest, you're effectively saying that price will break bull from 47300 and then you are going to wait for something like this on a lower time frame. So again, we are waiting for the price to break bull and then backtest this resistance or actually the support, because now we're expecting this resistance to act as support. So you wait for the price to break bull and then you wait for the price to mark a higher low or backtest it or maybe even a bull flag. Either ways, what you're looking for is are signs of continuation. If that happens, then you've made the right call, and then your next target is effectively all-time high. That's your first target. Actually, that's not that. This is your first target in that case. There you go. 53127. That's your first target after this resistance breaks. So if you do enter on a back test, you can use 53127 as a target for an entire position, or as your first target. Depends on what time frames you're playing. But in scenario A, that is what the play would look like. Another scenario is that we briefly reject and then come back down to post a higher low versus this. Actually, let's go into the daily. So in this scenario, we can basically say that price rejects from 47300, comes back down, posts a higher low versus this, uses the 20 EMA, and then moves up through this resistance. In that case, this would almost be a cup and handle sort of situation. Maybe, so this would be the cup, this would be the handle. It probably looks better on the weekly time frame. So that would look something like this. And then continuation from here. I think that's about it for KSE100 index for now. Thanks for watching.